So we are still watching company-specific results coming in here in this third quarter. We got the update from Uber there. And shares are in the green after that company showed its ride business still taking a continued hit, but Eats continues to impress there as well. So let's break down that mix a little bit further here with our next guest. Ygal Arounian is Wedbush Uber analyst. He joins us now. And Ygal, when we looked at Uber's performance, it was enough for you to boost your price target on Uber to $49 a share, up from $41. You maintained your outperform rating. So you must be buying this thesis that the boost in the Eats side of the business is enough to offset that hit to ride. So talk to me about why that is.
Yeah, certainly. So, and then there's one other thing that happened this week that I think is really important and
Sure.
is a key part of why the stock is trading higher and deserves a higher multiple, and that's that AB5 passed in California. Uber is not going to have to change their entire business model there. That has really big implications, and I think that was actually the most important thing that happened this week, earnings-wise within the quarter. Look, we're going to have volatility as long as the pandemic is around on the mobility side. There's going to be demand issues around rides and people going to work and traveling and all those things. That will probably work its way out over time. And then on the other side, the Eats business has just been phenomenal in terms of volume coming on. It's pulled forward a lot of demand and trends on that side. That'll likely subside partially over time as well as people start to go out. But it's certainly been a resilient part of the model, and I think it's given a really good cushion to Uber during the pandemic.
Ygal, when you talk about Prop 22, what is the expectation moving forward? I mean, sure, Uber and all these app-based companies don't have to classify their workers as independent or as full-time employees anymore, but there's still a lot of question marks about what the health benefits should look like. Whether cities could individually fight this and raise the fees for individual rides or for some of these companies. How do you see that risk, even if the cloud, as you've described it, has been removed?
Right. So that's a good question, and I don't think the story's over there. There's going to be a lot more kind of evolution to what happens and how people get paid over time. But the model that California was trying to implement really had a big challenge structurally to how Uber and these companies could operate their businesses. They would have had to kind of pull apart how they work right now and really change their entire model. And the fact that they're not going to have to do that, I think, is a big win for them. The other thing that they'll do is they'll take this framework and they'll start to be proactive about it with other states and other cities and kind of highlight, hey, this is what happened in California. The California voters really spoke out and said that this is what they want. This is what drivers want. And here's our proposal, which gives extra benefits and does a lot more for drivers than under the current model. And this is why we should go in this direction. So now they could be proactive about it. And I think that does a lot for them as well.
Yeah, I mean, we saw the boost that both Uber and Lyft saw after we saw the results come in on Prop 22. But I want to go back to the rides business too, because that's obviously a very competitive space when you think about the competitors there in DoorDash. And we know Lyft doesn't really have a food segment of the business, but there are plenty out there. When we talk about that, they did say they expect to reach profitability in that segment by next year. How realistic is that, though, when we see this race to the bottom in the delivery space? I continue to see it being very hard to differentiate your services when it's just bringing the food to your plate.
Right. And I don't think it's a guarantee or a given. That's certainly their target. The thing we have to realize in the food delivery business is that there are models out there that are working profitably. Grubhub itself in its third quarter, they had really strong demand also. It wasn't as high as Uber's was, but they were profitable in that quarter. Just Eat, that's acquiring Grubhub, they're profitable in many of their markets internationally. Even Uber Eats is profitable in certain markets as well. There's going to have to be rationalization in that business, and the discounting and kind of all that stuff's going to have to work its way through the system. There's certainly questions around how it all does play out, but I think as the business matures, you're going to see that's how you're going to see it play out and develop. ultimately we're going to have to find the right balance, and they're going to have to work towards profitability. But there are real life examples of it happening, and I think that's what you can really pin that hope on.
And Ygal, finally, that Eat side that you're talking about, certainly a big beneficiary during the pandemic, as so many of us stayed home and did food delivery. Looking beyond the pandemic, of course, we don't know when it's going to end, but how sticky do you think this is going to be? Or is there an inevitable drop off as things start to open up and people don't have a significant need for delivery?
Right. I think there's definitely an inevitable drop off as restaurants open up, as you said, whenever that is, who knows when it's going to be, but as restaurants start to open up fully, people like to go out. There's an experience behind it, and as people do that, there's the volume of eat in and dine in is probably going to go away to some extent. But I think again, it's one of these kind of consumer behavior habits that are forming during the pandemic. That means a good portion of it is going to stay around. Part of what I really like around on Uber's strategy as well is through their Postmates acquisition. They acquired this Latin America grocery delivery company, Corner Shop. They've been building out some of their own kind of product and grocery delivery as well. And they're moving, towards not just being a food delivery company, but food and groceries and other products. They highlighted being on a $1 billion kind of bookings run rate in that business, expecting it to be multiples of that next year. And so you're mixing in restaurant and you're mixing grocery and other things, and it becomes a lot bigger of a business than just food delivery, and can rely on multiple pieces to drive it.
Yeah, and even with the pop today, about $5 still to go to hit your price target. We'll see what happens. Wedbush's Ygal Arounian, appreciate you taking the time.
Thanks.